Welcome back. You're still tuned in to Midcap Radar on CNBC-TV18. It's time to talk about some fundraise. Marathon Nextgen has successfully raised 900 crore rupees via the QIP route. To discuss this fundraise in detail and the business outlook going forward, let's get in Mayur Shah, who is the Vice Chairman at the company. Mr. Shah, good afternoon. Thank you so much for joining in. Well, 900 crore rupees, that's a big amount. What are the plans to use this money for? And if you can detail the plans going forward as well with this fundraise.
Yeah, good afternoon, Sonal. We have raised 900 crore and out of this, 300 crore is for the reduction of the debt. And the balance is the growth capital. We want to acquire more projects and going forward from our upcoming projects, investments. So Marathon has been able to do two big corporate action in last 3 months. One more thing which Marathon has done is a scheme of amalgamation was announced and approved by the board, whereby almost 418 acres of the group land has been merged into the Marathon.
Understood.
The merger will take around 9 to 12 months, but the board has already approved and it is right now in the process of a merger. So that way, these are the two major corporate actions like raising 900 crore and as well as merging all the group land bank into the Marathon.
Understood that. So the rationale for the merger was to amalgamate the group land bank into the listed entity. Give us a sense of the rationale for the QIP as well in terms of the shareholding. What was the promoter shareholding, number one, in the listed entity pre-merger? In the unlisted entity, we are assuming you held a complete stake over there. Post the QIP, almost a 30% equity dilution was done. Post the QIP, what will be the promoter shareholding? Does it fall below the prescribed SEBI limit of 75%? And also, is there any tax angle? Would you be bearing a higher tax burden post this particular amalgamation?
No, the rationale was, to have efficiency coming in from all the group land bank into the listed entity. What we have seen, we are targeting is the post-merger. Right now, the dilution is of approximately 17% when we are raising 900 crore. But the post-merger after nine months or so, we are coming back at 74.5% because of 3,200 crore worth of the land and the assets which are getting merged into the Marathon.
Can you repeat that number again? You said post amalgamation, the promoter holding would be around 74.8%, if I got that number correct.
Yes, 74.5.
74.5%. Okay. So a follow-up on the promoter holding itself, Mr. Shah, the BSE website shows there is a major pledge on promoter holding. Can you explain the impact now? How much of it will go away?
Frankly speaking, there is no pledging of a Marathon shares. Basically, there is one NDU, not to reduce our percentage holding in a group company was actually registered and it has been misreported, and we have already returned to the SEBI and the stock exchanges to correct the effect, because there is absolutely zero percentage of pledging of shares of Marathon Nextgen as it stands. And I think they are going through a correction.
Okay. So what is the final pledge? What will be the pledge post the correction?
There is no pledge.
There is no pledge. Okay.
Absolutely zero pledge. Actually, we have registered one NDU which has been misinterpreted as a pledging of a shares.
Understood. Mr. Shah, one question. Pre-merger with the group entities, what was the total debt on books? Post-merger, are you assuming any debt from the promoter entity? What is the cost of finance? And post-merger, do you expect to see that reducing?
Yeah. So Marathon Nextgen has been having a robust 2024, and whereby we have reduced our debt of the listed entity by almost 200 crore, and highest ever PAT of 190 crore was reported in March 25. In the merge scenario, we have another 550 crore debt coming in. However, so altogether, let's say, as it stands, around 1100 crore of total debt in the merge entity, out of which, again, during this year, we intend to repay through our cash flow almost 50%, and we are also repaying through the QIP funds approximately 300 crore.
Okay, so you will be left with around 200 crores of debt by the end of this year.
Yeah, we are targeting around that.
Okay, so that's about the balance sheet. Let's talk about your operational update. In terms of sales, what are you targeting in FY26? You did around 600 crore rupees. What are the launches looking like? And will you continue to focus on Mumbai micro markets?
Yeah, basically we have clocked almost 873 crores of a pre-sale in last year, and we are looking at almost 20% growth in that number. And for the launches, like we already have 65 lakh square feet of construction development is going on in Mumbai MMR, Panvel, Bhaikala, Bhandup, and Dombivli. These are the micro markets which we are focusing on. And from the acquired land bank of Marathon Nextgen, we will be launching, we have another 50 lakh square feet of launch capacity, out of which we intend to launch around 2.2 million square feet, 22 lakh square feet during this year.
So, Mr. Shah, 22 lakh square feet this year. Out of that, what will be through Marathon route, what will be through the JDA route or any other JD or JV route, and what will be the support that you get in from your partner?
Yeah, so basically when I say 22 lakh square feet is already acquired land bank of Marathon, but out of this growth capital of another 600 crore which we are targeting is an asset-light model, JDA and JV in Mumbai MMR region. Particularly, we are looking at society redevelopment, cluster redevelopment in the central and south Mumbai. And we already have tied up a couple of those schemes. At appropriate time, we will announce the JDA for the same schemes.
All right, so we'll come back to you again and have that conversation about the new updates with respect to business. Thank you so much, Mr. Shah, for joining us today with those updates about the fundraise and most importantly, the amalgamation that has been ongoing for a while now. With that, we'll slip into a short break, but as we do that, here's some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.